yes, we have a very exciting program here today, and you're going to see with our simple approach at MasterTrader, every single chart I'm going to show you today has just color-coded candlesticks, a couple moving averages, and volume. There's no junk on there, there's no oscillators, there's no Fibonacci, but using retracement concepts is one of the concepts in the overall MasterTrader approach that is very important to us in giving us valuable information about the underlying, whatever you're trading. And we're going to simplify the messages for you today. So what are you going to get out of this? I don't care what type of trader you are, short-term, swing trader, investor, you have a money manager, learning our approach is going to give you an objective approach to see what's really working and what's not. I'm going to show you how to quickly and just visually interpret the messages of retracement. You do not have to get out your Fibonacci protractor, which is what we call subjective thinking, that genuinely is going to provide support and resistance when we like to say, just look to the left. That's going to tell you what is real versus an imaginary squiggly line or a horizontal line. Our strategies, all of our strategies, including everything we're going to talk about today, applies to anything you want to trade. Stocks, futures, currencies, commodities on any time frames. Information today is going to be very valuable. At MasterTrader, when everything starts with a compelling chart setup on multiple time frames, and then we decide whether we're going to trade stocks or options, and whether it's what we call a directional trade, where multiple time frames are in alignment, or an option income trade, and I'll show you some examples, where we're merely calling a short-term top or bottom, and we sell options and spreads around those turning points, and we collect money and profit through time decay week by week. It's like a weekly income, if you will. Now, I just caught the last few words of the prior presenter, and I couldn't agree with him more when he said, and I'm paraphrasing, don't get caught up in quick, rich schemes, red light, green lights, the proprietary indicators that are going to promise you the roads to riches. And, you know, it's similar to the garbage you see on TV that says, hey, I'm going to sell you a pill to lose weight, and guess what? You don't have to diet or go or exercise. Well, good luck with that one. I've been trading in the markets for 3 decades. I started as a kid doing fundamentals with the Wall Street Journal and Barron's, and so I know what works, and technical analysis works. I love trading stocks and options. I personally love options just because of the 3-dimensional aspect that you can create different risk to reward profiles that are better than trading stocks. I've worked with a big global proprietary trading firm, managed traders. My partner Greg Capper and I actually been working with him over 2 decades. I call him the pioneer of technical analysis. He started before they even had any direct access trading platforms, where there were times he was just handwriting charts, and he did everything imaginable to study price action. And that's what we teach through the MasterTrader strategy. So we formed MasterTrader together a couple months ago. We've trained tens of thousands of traders. We have a private consulting division for high net worth individuals, and we just customize what they need. The obligatory disclaimer, I kind of joke about this. I mean, of course trading involves risk. Anything you do to invest is a calculated speculative action, whether you're trading real estate or stocks. But our approach, we have an 85% success rate in trading stocks and options, because our approach is systematic, it's objective, and we stack the odds overwhelmingly in our favor before we take a trade. There's many ways to skin the cat in trading. But as you see on the first bullet, you need a method. What is your method to consistently pull profits out of the markets? You aren't just gonna, I mean, you might get lucky in a bull market, like in, the internet days when I started trading in the late 90s, and you think that you know what you're doing and just be a penultimate bull, and then guess what? We call those short-term dividends. You will give them back to the market until you get the proper education and approach. You will see our approach today, which everything starts with a high probability technical setup on multiple time frames. No pattern, no trade. And then I'll show you the other components of the MasterTrader method. But then we simply are entering the trade and managing in between per our trading plan. I mean, I see trading no different than being the manager at the Nordstrom's retailer who's exchanging merchandise to try to make the profit margin. We're doing the same thing here. We're buying and shorting stocks, commodities, currencies, futures, with the intent of closing them out at a profit. So it's just inventory to us. Some of our traders like to use a fundamental approach simply to screen the candidates, and that's totally fine with us. I don't care. Personally, I'll trade anything that moves and that's liquid and that has a high probability setup. I don't care about the fundamentals myself. But if you want to use that as a screening, then go for it. There's nothing wrong with that. You'll see the chart patterns and many of the examples here I'm going to show you. We like, and I'll define this in the next slide. And once you get this, similar to a pilot that has their license and their ground trading and they're off to get their seasoning, trading and investing is no different. Once you get the conscious knowledge and know what you're doing, it's just experience that from that point forward. And the goal is to try to get to the unconscious competence level where when I'm scanning charts, in 1/8 of a second, my brain can just digest the information on my chart setups on multiple time frames, and I can tell if it's a compelling setup. That's the unconscious level. I don't have to slowly say, okay, well, what's the trend, where's support, what's retracement. Once you have your proper approach, then you just need the discipline and patience to follow your method. It's that simple. These are the other concepts that you're going to hear me talking about that form our approach to MasterTrader technical strategies. Price pattern, I mentioned, no pattern, no trade. Multiple time frame alignment. Is it showing relative strength or weakness to the broader markets and the sector or key competitors? This is what we're going to be focusing on today. The retracement analysis in connection with the overall pattern. Bar by bar analysis, are red bars being ignored or green bars being ignored? And then what's the market bias? I'm going to use that to also help determine not only the entry of my trades, but the management of them. And we mentioned once we're in a trade, we're simply in management mode. That's it. It's another bus coming by. It's another trade. These are our general concepts. What is retracement and what does it mean? Well, we're going to use the retracement levels that they're going to give us this information. They are going to show us these very simple ways, again, without Fibonacci, the strength or weakness of a move counter to the prevailing trend. So a retracement. The amount of the retracement, and we're going to eyeball it. We're not going to be using Fibonacci. I'm keeping repeating that. We're just going to eyeball how deep did it retrace and what messages does that convey not only to, as I said, the strength or weakness of it, but to give me the predetermination of what I think the stock's next move is going to be. So then if I get that set up and I get my reversal, then I've already planned out the trade, how I want it to set up. If it doesn't set up, that's fine. My partner Greg calls it factory work, and we just have all the concepts to bar by bar wait for our methodology to set up. If it does, we enter the trade. If it doesn't, then we don't. It's that simple. Retracement levels alone are never a reason to trade, although some in the industry might tell their people that, oh, I have this proprietary retracement level that nobody can see them except my computer I've made. So when it hits this level, just hit the buy button. That, in our opinion, is such a novice approach. And we're just going to eyeball these levels. But this is right out of the dictionary, subjective versus objective. And I'm showing you this definition because MasterTrader is objective. We always say it is what it is. Subjective means what? It means it's based on your personal opinion, your judgment, feelings, or point of view. You're subjecting your wishes into the trade setup, trying to justify why you want to put your money on the line and enter the trade. Our approach is to focus on factual. It's presently existing in fact. I can observe it, I can measure it. And then we determine the information from that and put them together with the overall strategy to make our trading decisions. Fibonacci. So it is a subjective tool attempting to predict market turning points. This is, if you just pull it up on your platform or your textbook, these are the main Fibonacci numbers, 38.2, 50, 61.8. I'm going to show you how the levels that I want you to eyeball and how to interpret them using our approach. Now, these, if you have a big enough bankroll, it may become a self-sufficient prophecy if many people are basing their trading decisions off the same analysis. For example, a derivative means something derived from something else. So a oscillator in the trading world is a squiggly line that is derived from price and volume. And there's over 200 of these oscillators that people have invented. A trend line is a subjective tool. I mean, it's just crazy to think that by drawing a line out into the future, that when it retraces to that, it somehow magically is support. Again, we say look to the left. So if you have a big enough pocketbook and you say, hey, Apple computer on the daily chart came back to 38.2% retracement, and you just buy, it will hold there. So that's the self-fulfilling prophecy concept. But it's still subjective. It is not objective. Turns are going to occur at prior points of supply and demand, just like with moving averages and trend lines. We look to the left. A moving average is also a subjective tool. Just because a stock retraces to a moving average means absolutely nothing in terms of supply or demand unless you look to the left and it corresponds with actual levels of supply and demand. Our objective analysis keeps our opinions, to ourselves and not to our subjective misleading wishes. This is one setup we call just a very simple MasterTrader buy setup. We like the KISS method. Keep it simple, stupid. What is a MasterTrader buy setup? Well, I have a strong uptrend. What's an uptrend? Very simple. Higher pivot highs, higher pivot lows. yes, I'm going to use my subjective rising 20 and 50 period moving averages as just a way to speed up the analysis process. Then I want a controlled retracement from a V top as opposed to 10 bars up here before it retraced. And then I want a reversal at support. Here's MS means minor support, prior highs, prior lows is what we call major support. And you can see the retracement here. We're going to be measuring these retracement concepts the whole rest of the presentation. You'll see examples from pivot highs and lows. So from this area to this area, this was a very shallow retracement. It didn't retrace much at all and then broke out. This is roughly a 50-60% retracement, but I got my reversal on minor support. So I'm going to enter over this bar's high, stop under the low, manage in between. It's that simple. Now, after less than 40% retracement, so I have an uptrend here, just eyeball it, 40, 50, 60, 0 to 100. So if it reverses at 40%, that means the prior trend is positive and the trend should continue. And then the same on the downside, the retracement in a downtrend. What about now after 60%? We say that this trend is now considered neutral, possibly negative, because in a strong trend, they should reverse at 40% or less. Why? Because it's showing that buyers are stepping up and not letting it retrace to lower prices. We teach this on multiple time frames. Retracements in the area of 60% or more. If you were to drop down one shorter time frame, it's a beautiful reversal bar in the longer time frame. 5-minute chart, it doesn't matter the time of the chart, but let's walk through this. So we'll start over here on the left. Big move, big power move. So here's my pivot low, here's my pivot high. Now it's retracing, it's retracing, it's retracing. It did not hold at 40, it did not hold at 50, it exceeded 60. So what am I now thinking based on what I just told you in the prior slide? I'm thinking that that's weak now, it's greater than 60. So let's look here at A, followed by a weak bounce. Here's my bounce. It did not. And so I would now measure a bounce from this pivot high to this pivot high. Just eyeball it. It didn't bounce much at all, right? I don't need a fib to tell me that. So now I'm going to my chart pattern and the candlesticks to find a place to short this. You short it, the next support area, this is my target. So it came all the way down, bottoming tail, look to the left, it reversed. I have a bottoming tail, I have a green bar, I have another bottoming tail. So you can go long here. Now, see, measuring retracements it's an evolving concept. So now I'm taking this pivot high, this pivot low, and let's see what it does on the retracement. So I'm just eyeballing it here to here. There's 50%, 40, 60. It now went greater than 60% on the way back up. And I got multiple bottoming tails here. That is a sign of strength. So then you can buy that breakout. And, you know, obviously we have all different concepts that we overlay here. Price void, resistance, red bars ignored. And then it, you know, broke out and is chopping around. Many more examples here. What about now a retracement of 80 to 100%? Strength came all the way back down. The trend is considered negative. Tradable retracements off of support and resistance are fine. So you can expect a short-term rally, but it's bearish. Another example. Starting here in the morning, it did its move. So now we're sitting back, waiting to see on the retracement of where the buyers step up. Could they have stepped up right here? Of course they could have, but it didn't. So don't subject your wishes. Let's see what happens. 100% retracement. And while this bar was being formed, it engulfed this bar. So this is what we call a concept called a price void. When stocks come down in a fluid manner like this, then they have an easy way to go back up. So you could buy over this and then just manage in between. I didn't know it was going to make another 100% retracement. I had no idea. But we're in management mode, using our management concepts of bar by bar analysis. Where's resistance? What are the internals doing, etc. Then the next retracement is bullish, 40%. And 20 MAs in alignment, as I mentioned before. I have 3 bottoming tails, 40% retracement after 100%. I don't care if this is Apple, a currency, a bag of rocks. I don't care what this chart is. This is an extremely high probability setup based on these retracement concepts. Not retracement alone, but I'm overlaying the setup with you. This is a buy setup, 40% retracement, 3 bottoming tails. You buy over that, stop under here, manage in between. Greater than 100% is bearish, but it's the exhaustion of the prior supplier demand. So do not, let me back up. Do not ever, folks, ever, if you see, let's start with this one. If you see any novice newsletter writer telling you that a stock that's been up and up and up and up and up ran from the bottom of the range to the top of the range and they call this a breakout, then that is such a novice approach, because you do not buy after greater than 100% retracements. You only buy on a pullback like this one and the prior slide that I just showed you. Greater than 100% retracement. So based on what you've learned so far, folks, if I were to give you a quiz right here, greater than 100% retracement, I ask you to answer to yourself, what are you thinking is the message of the pattern? Answer, I want to see if it can give me a compelling setup. In this case, it's a buy setup. I got my V top, like I showed you on the buy setup earlier. I got my bottoming tail, 40–50% retracement. I buy over the high, stop under here, manage in between. That's another no-brainer setup, as we call them. And that's what trading is. Wait for your no-brainer setups. Here's a buy setup after, I'm just eyeballing it here, right? Here's my pivot low. Here's my pivot high. So again now, based on what we went over, once this starts to retrace, what are you thinking should happen if it's going to stay strong? I have a rising 20-period moving average above the 50, above the 200. This is what we call a breakdown failure. Snapped right back and broke out. I'm expecting some bullish reversal at 40% retracement, which in this case was in alignment with minor support. I got red bar, I got green bar, so that's what we call a 180. I got another red bar. It had no follow through. Now it closes at the top of the range. This is a no-brainer long over the high of this little green bar, stop under the base, manage in between. Now I'm going to show you just one of our income option strategies that I mentioned, where if we find turning points where, if it's a directional trade, as I said, where multiple time frames in our alignment, I want a directional stock or directional option trade. And we teach that through, buying calls and puts, spreads, diagonals, etc. This is our income trade, where I find a beautiful pattern of a turning point. I want to sell a put option under support. I want to buy a further out of the money put, just to limit my downside risk, and it's less buying power consumption at the brokerage firm. The difference of those two numbers is a credit that is going to hit your account. As long as it expires above this short put level, this money you put into your account is 100% profit. We have a service called the Weekly Options Trader, where it specializes in just selling options and spreads like this around compelling patterns. The last 3 weeks, I have to go add them up. Last week we were 7 for 7. The week before that, we were 12 for 14. The week before that, I don't know, 15 out of 16. These are wonderful, wonderful trades when you follow our approach to selling spreads with the patterns. Let's now look at all these stars and discuss retracements and bullish and bearish setups. So big move here. Now I want to see how far it retraces. Eyeball it, right? You don't see one single protractor Fibonacci here. So this was roughly 50% from this, whatever pivot you pick here, from here to here, 50%. Okay, so remember I said that's not a reason to buy. Now I want to see if there is a setup. Now, because this one went up so fast, there's no minor support over here like there was in the other examples I showed you. So I want what's called we call it a potent reversal. Show me something where it's confident. This one never gave it to me. Instead, this is like a little bear flag. This is what we call a wide range igniting breakdown bar. And then it slammed back down, folks, back to 100% retracement. Okay, so you just learned that that's bearish. Now it's chopping around, building support over time, overlapping bars. Let's see how far it goes. Here's my pivot, here's my pivot. It went 100%. What did it do at 100%? Did it retrace? Well, this one little bar tried to retrace, but it closed with a bottoming tail. Every single bar is giving me valuable messages with the retracement concepts. So 100% retracement and going sideways, you will learn in our Master Trader Strategies course, is very bullish. So it finally broke out. So now my new pivot reference is here to here. There's my, just eyeball it, 40% retracement, bottoming tail at minor support. You buy over the high, stop on a low. You see, folks, once you have an approach and you know how to objectively read price action, trading is really it's fairly simple. I did not say that we have 99% success rate. I said 85 plus. But there's some quantitative folks out there that who say nobody can read charts of price action, that it is a coin flip. They say it's 50-50. Nobody can predict price action. Well, we've been in the business teaching educators, teaching students over 25 years, and guess what? We wouldn't be around with 85% success rate if that were a true statement. What do we got here? A blast off. So based on what you've learned in the last 30 minutes, what are you thinking right now, folks? I'm thinking, please, please give me a 30 to 40% pullback to minor support right here. Give me a buy setup, and that will be a no-brainer entry. The market doesn't care. WBA, Walgreens boot, doesn't care what I want. Instead, it went sideways all through the day, all through the midday doldrums. That is strength, because it won't retrace. Strength. You can buy an afternoon breakout. This is kind of a sloppy buy setup, but I'm going to show you in a moment. You can still use these retracement concepts in wide range bars. We want wide range igniting bars, which means it's a wide range bar from consolidation, like this one here. This is a wide range bearish bar from consolidation. If the message of this ugly red bar and this bullish green bar, we do not want prices to retrace more than 50%. As you can see, this one didn't. As you can see, bottoming tails, buyers are stepping up at 50%. That's still very bullish price action right there. Here's another example of the 50%. Wide range bar. So remember remember our retracement concepts from here to here. A couple failed breakdowns. There's a lot of bullish price action going on right here. Red bars ignored. Blast off greater than 100% retracement. What have you learned so far? Let's see what the retracement is now into the bar. Eyeball it, folks. You can eyeball it both from the pivot here to the pivot here, and eyeball it into this wide range igniting bar from consolidation. I got two bottoming tails of 50%. Another no-brainer trade. And I purposely gave you a weekly chart to show you everything I'm showing you applies to all time frames. This is a controlled buy setup, two bottoming tails, inside bar, higher high, higher low bar. It's a no-brainer setup. Two different examples here. Retracement, so it's this pivot to this pivot to this pivot, and the retracement into the wide range bars. It's kind of like a flag or consolidation, rectangle, whatever you want to call it. We don't care about names. We care about objectively interpreting price action. So this one, and if you draw a trend line here, this is what we call a professional gap, meaning it's a gap that ignites a new move. And you might ask, well, what trend was it in before? My answer to you is sideways trend. Look, I got relatively equal pivot highs. I got some pivot lows down here. My moving averages are all kind of in a trading range going horizontal. And I don't care if this was earnings, the CEO resigning, if I don't care what the news is, we traded the same. Professional gap, igniting a new uptrend. Notice that there is no tail, no bottoming tail. So what that means is at the market open, this buyers just stepped up. It could not retrace into the gap. It gapped up again, wide range bar. So what would you be thinking based on what you've learned so far? You would be thinking, let it retrace, let it build support over time, because when things go vertical, as I mentioned, there's no frame of reference of support. We like buying reversals on support and selling reversals at resistance. So this was a bullish consolidation over time. You can buy the breakout over the high of this red bar, stop under support. This one, same, it's kind of bobbling around here. You just got to find your entry, but it looks like over the same thing, over this tail, stop under here, manage in between. It's building support over time. This was, I remember this one was fairly recent. It was on a Fed announcement day where Chief Powell was threatening, so to speak, to take away the punch bowl to Wall Street of the flooding of liquidity and interest rates, and the market had a tantrum. So we're in a downtrend, lower lows, lower highs. This is what we call a wide range igniting bar. So folks, you've learned so much in the last 40 minutes. So downtrend, out of consolidation. What is your expectation? If you just woke up and you turned on your computer and you saw this red bar and this pattern, based on what you learned in 42 minutes, what are your thoughts? I'll tell you. My thought is, give me a bearish pattern to short. So I don't want it to go more than 50% into this bar. And we aren't talking about it today, but for a bearish entry, I would drop down to a smaller time frame. This is a 15-minute chart, maybe 5 or 2. I would love a double top that didn't go over 50%, and that would be my no-brainer short entry. Guess what? Spiders don't care what I want. This is a deep move greater than 50%. It's chopping around, took out this bar's low, bottoming tail. Now, folks, I have greater than 100% retracement from this pivot to this bar. So what am I thinking now? I'm thinking, let me see how it retraces. So the retracement from this tail to this tail, just eyeball it, 40%, minor support. The 20 MA is in alignment with support. Bullish engulfing. Folks, you're going to get tired of me saying this. This is another no-brainer setup. You buy over this green bar's high. And you know how tight you had your stop. I would probably have said, put your initial stop under this bar until it gets what we call altitude. Then I would move the stop here, and it depends if you're trading this as a day trade or swing trade, would dictate how you manage that per your trading plan. Next day, and actually, if you want to go look, folks, this is the spiders, 286 bucks. I'm going to look right now, because that actually, I think, was the dead low from last October. The spiders went up to $334. And it started on this intraday reversal based on the concepts I'm teaching you here today. And somebody wants to suggest that charts don't work? That's ridiculous. My partner, Greg Capra, pioneer in the industry, this is his amazing swing trading course. He puts it together, puts all the thought building modules together. So anything that you look at, folks, any time frame, anything that moves, like I said, bag of rocks, Apple, the euro, spiders, you have everything in the course to understand what is going on and understand in much greater detail everything that I've been talking about today. I don't care what your level of knowledge is on technical analysis, whether you're brand new, whether you've been in the business 20 years. We have a few 20+ year veterans in our green trading room, and who have taken this Greg's course, and they say, this one guy, he's funny, he says, you know what, guys, you can and you have taught an old guy new tricks, an old dog new tricks. He says it's another student's started with Greg 25 years ago, is still with us. He said they have their own trading plans, they have their own styles, but being with us has a constant flow of trading ideas, of answering questions, of scanning live in the market, of analyzing the market all along, give a pre-market bias. So I highly recommend that course. So many people like to start trading with the excitement of the patterns and the things that I've been talking about today, and they're like, oh, show me the patterns. Yeah, I'm excited. I want to trade that buy setup, whatever, breakout, whatever we teach them. This is our advanced management strategy course that Greg made. Trust me, if you don't focus on proper money management, you will not survive in this business. So this is an integral part of success. Sure, you can understand, chart reading once you take the course and understand it and get some seasoning, but this is, it's just it's a prerequisite. They go together. So we're offering to you, if you buy the swing trading course, then we're going to give you this advanced management strategies at half off. I mentioned to you, I have a full option strategies series course, which teaches directional and income selling strategies with options. But I'm just showing you the link here because people seem to just love these credit spreads that I mentioned to you, because you win 2 out of 3 market directions. If I sell a put spread on any of those bullish charts that I just went over with you, sell an out of the money put, buy a further out of the money put, I collect 500 bucks as long as it stays above that line. The stock can go up and I win. The stock can go sideways and I win. And guess what? The stock can go against me all the way to my break-even point, and I still make money. We have a silver package there. It's a 5-module, great course. This gold, it's just turbocharged. It's like grad school of credit spread trading. It's 12 detailed modules on many different aspects. It gets into volatility trading, trading earnings, trading news. It's an amazing course. And then we just put it together, a no-brainer package here where you'll get 3 months of the green trading room, and also 3 months of our weekly options trader, which is the one I mentioned that specializes in selling options. Go to mastertrader.com/spread trader, and you can read about all these. I encourage you, go to mastertrader.com if you aren't familiar with us. Just sign up for the chart of the week, and you'll get in our database. We give away a ton of free information, and also including every Wednesday on YouTube, we give a free 1-hour education. My partner Greg and me, it's called MasterTrader Live. We give an amazing 1-hour education on any topic of stock and options involving the MasterTrader method. So thank you everybody for attending. Good luck with your trading and investing career, and I hope I shed light on whatever approach you currently have. Our goal is to take these concepts, simplify it, and make it better. So good luck everybody, and hope to see you soon.